Michael, thanks very much for joining us. Good just to catch up in terms of Rynda Properties, and also, I suppose, what's the strategy now in terms of the investment side?
Well, Richard, we were, through sort of an element of fortune and good design, we ended up with a very small portfolio coming into the pandemic, having sold about 90% of the portfolio in December 19. And that allowed us the luxury of thinking through where we felt the property market was going to develop. Generally, over the last 5 years, we've been reducing the risk that we've taken as we've come down the return profile to more core plus. And looking at the demographics in the UK, it was very clear to us that we should be looking at the care home market and the student living market, particularly purpose-built student accommodation. And out of that analysis, a few strategic recruitments, we are now, I say, heavily involved in care home acquisitions. We've bought 9 assets in the last 11 months, spent just under a couple of $100 million for one of our existing clients who have also followed us into this sector. It's new to them, but it suits them in terms of getting exposure into different sectors than the more traditional sectors that they've been very heavily weighted to in the past.
Are you looking also at areas like senior living with slightly less care, all the way through care homes and into healthcare, or what's the sort of sweet spot for you in terms of the asset side?
I think at the moment we are definitely looking at senior living. We are doing the research on the type of to sell model or the to rent model, and I think the balance of probability we will get more involved in the to rent model, which we think creates greater flexibility for the residents, which actually is better for their property investment ultimately. I see us continuing investing in the care home market. At the moment, we've been very focused at the top end in terms of quality, which has meant that a lot of what we're having to do is forward fund or forward commit to projects because the assets that we want aren't available to buy, so we're having to create them. But I do think we're going to sort of broaden that care home focus to some of the sort of best of the rest assets, as if I could call them, and slightly further down in terms of the weekly fee rates, where we think there's a very solid market. But again, the assets aren't necessarily purpose-built. So there's a broadening of strategy in the care homes and certainly an entry into the senior living sectors.
Yeah, it's a really interesting area, I think, moving forward, Michael, and interesting to see the amount of capital actually now beginning to look at these areas, which maybe weren't 2 years ago. Thanks very much for joining us.
Pleasure.